Downer EDI at the top of the hour there. Look, legal costs, but jump on market.
Yeah, the shares are up. The market doesn't like uncertainty, so a legal dispute pending market. They've come to a settlement there on that legal dispute, so the shares have actually risen 3% today, and it's actually more than they've put aside in terms of cost. So an interesting move on the market there. They're going to be paying around $40 million to settle this tunnel contract over in Singapore. They only put aside $28 million, so there's going to be an extra $12 million cost hit to the first half earnings of 2012, 2013. But I think brokers are becoming a little bit more optimistic in terms of Downer EDI. There's a range of brokers that have buys on them at the moment. Having a look at Nomura has a buy on it with a target price of a bit over $4. JP Morgan also has an overweight rating on the stock at the moment. And I think this is to do with one thing to do with the Waratah train project. They've been making good progress there. There had been a lot of issues with this project in the past. There are still risks there in terms of cost and delivery, but certainly is making progress along those lines. But certainly there's a little bit of uncertainty around government infrastructure spend at the moment. Of course, mining capex. Downer EDI provide engineering services across infrastructure and mining and rail projects. So they're very leveraged in terms of government spending on this and as well as mining capex. But certainly I think a positive for the stock at the moment is in terms of valuation. It trades on a PE discount to the broader industrial sector on the market. The balance sheet has improved significantly in the past, and it's got solid levels of work on hand at the moment. So I think one driver of share price moving forward for Downer will be the possibility for the company to reinstate dividends moving forward, which could come about around 2014 or so.
I want to get your thoughts on some of the movements we're seeing on the index at the moment, in particular those miners, particularly those with a bit of exposure, if you like, to iron ore, doing particularly well.
Well, they are the big drivers of the market today. The sector's up around 1%, and it's really the heavyweight miners, excluding Newcrest, which is down, which are driving the market higher. BHP, Rio and Fortescue. Commodity prices were broadly higher overnight except for oil, but BHP and Rio both now at 7-month highs on the market. They have been significant underperformers of the market over the past 6 months or so. BHP, importantly, has broken above $35, which has been a bit of a key resistance level over the past couple of months, and it even looks to be bringing out a new uptrend at the moment. If you have a look at a 2-year chart of BHP, you can see over the past few months it's just started trending upwards, which is a positive for momentum moving forward. But the Rio chart also looks a little bit similar to that. You can even see the 100-day moving average on the Rio chart is now starting to trend higher as well. But certainly the standout at the moment is Fortescue. It's up close to 11% just today and yesterday alone. There's been a good rebound in iron ore prices at the moment, up around $123. The Chinese market has bounced over the past 4 or 5 days, which is driving that stock higher. But I think the outlook for key commodities is looking a little bit better at the moment with the data that's been coming out of China. As mentioned, iron ore's back up around 123. Copper seems to be quite well supported at the moment, and the outlook for copper in terms of growth is quite good. And I think coal prices had been a major concern in the market previously. I mean, coal prices are down something like 25% year to date, but over the past couple of months they've actually managed to bounce back around 12%, and the outlook into 2013 is now looking a little bit better. So I think with commodity prices continuing to remain at these sort of levels or even improving, as well as a better performance coming out of the Chinese market, we could see some sustainable better performances in the materials sector.
Yeah, look, I wanted to get your thoughts more broadly on the market as a result of some of these materials doing well. We are positive, but I don't know, it's a little bit up and down at the moment.
It is very much, and there's not a huge amount of volume going through the market over the past week or so, only sort of up above that $3 billion level. But we did sort of brush aside those Italian concerns overnight, and it was a very choppy session on the US. And our market's doing quite well, up at around 1/3% today, really driven by the materials sector. But if we can close at the levels we're at now, which is above 45.71, which is the previous high we'd seen back in October, that would be a 17-month closing high for the market, which would be a positive. And if we could break above that level, looking at the peaks in the uptrend we've seen in the market more recently, you can see this uptrend here. You'd probably be looking around the 46.30 level on the ASX 200 as the next point of sort of resistance the market may find. But I think some of the mid-cap miners in particular are performing very well today. If you look across Iluka, Panost, Oz Minerals, they're all up around 3-4.5%. So performing very well on the back of some better, some investors moving into some more cyclical sectors. But I think that business confidence read was somewhat of a concern for the market. That's back down to 3.5-year lows. Manufacturing, of course, coming out the worst read out of those sectors. And it's just showing us that the Reserve Bank rate cuts, it's not flowing through the Aussie dollar. It remains stubbornly high. It's not really flowing through to a lift in demand either. We also saw the National Australia Bank, when they did release this read today, adjusting their GDP forecasts as well. So certainly the market at the moment does appear to be moving higher. There's not a lot of volume behind it. So it'll be interesting to see how sustainable this run that we've seen recently is.